Welcome back to the channel. I'm Foreman, and today we're going to be talking about the UK stocks that I bought this week, as well as what's really been moving and falling in the portfolio. And if you like the video, please drop one of these to help beat that YouTube algorithm. According to Google Finance, in the last 5 days, the Ftse 100 has fallen by 1.81%. The Ftse 250 has relatively been sideways, dropping by 0.16%, and the S&P 500 is at a very similar level as of recording this video of about 0.1% of a fall. My portfolio, however, for probably the first week in a very long time, has actually outperformed the markets and gained 1.67%. However, I expect this victory to be short-lived. And when I say victory, I do want to mention that I don't have any emotional attachment. So on a good day, I'm not going to suddenly be like, oh yes, I'm having a great day, because realistically, this is still the short term. Anything can happen. And I largely anticipate that I will likely consistently fall under the markets once more. Although, seeing as what's happened in the last week and the news of my companies, I do think a few of them are primed to steadily increase in value, and so we may see a stretch of consistently outperforming the markets with this portfolio, as at least since the start of the year, my portfolio has been just declining and declining and declining. Although you might be looking at my total portfolio value and be thinking, well, it's not really declined, in fact it's going up, so what do you mean? Well, that's because I do average pound cost averaging, and it means I regularly put sums of money into the markets, hence why my portfolio value has managed to stay up, or at least sideways, whilst my portfolio performance has dropped quite savagely. I, however, am not bothered about this, because it can take 4, 5, 6, 7, 8 bad years in a row, but if I'm able to continue building up these positions, then I'm happy, because over time I think this will increase. A notable mention for this factor would be the likes of Boohoo. Last week they've continued to rise off of the positive news that they were going to invest £500 million into the UK to create 5,000 jobs to meet the growing demand, which is a great statement. I love seeing that they need to meet the growing demand, because it's showing this company is doing financially very well, and so them meeting the growing demand is a great sign to see. Boohoo is one of those companies where I think if they continue to remain stagnant in share price, like in the last year they're down about 8%, they're already massively below their all-time highs. If the share price just hovers around this area, goes up and down 10%, and it does this for the next 5 years, their price to sale ratio is just going to keep increasing and increasing, because their revenue growth is fantastic, and it's at least 30%, although they did have a gloomier guidance of 25%. Even with growth rates of that and continual increasing, this is going to compound, and eventually I'm going to have a very attractive price on sales valuation, and so I'm happy to hold for the longer term. Although during this time, many people might lose sentiment. Investor sentiment is very important in the markets, but it is a great way to gauge what direction a stock is headed. Typically, the stocks that keep rising up and up and up and reaching new all-time highs each week, these have high momentum, and usually these have great sentiment because people are making money. And so more people want to make money, and they're happy about making money. This is also quite common in a bull market, especially what we had seen following the pandemic crash. Everyone was making money. It was almost easy. It was almost very difficult to not make any money itself. Boohoo is actually the stock I bought this week. You're probably not surprised, but I'm happy to continue averaging up my share price, which is roughly around £2.55 per share. This is because this is my second highest conviction stock in the portfolio. They're trading at a very attractive valuation, and I'm very much interested in increasing this position, because I think they're going to continue to dominate. And with all the problems they've currently got, it's creating almost a perfect storm, in my opinion, because this has turned into an opportunity for myself to buy more at a discounted price, gives an opportunity for the business to really reflect on their business model, improve their ESG standards, and move forward with growth, whilst also being mentioned in the press. And I think no bad press, I do believe in the saying where no negative press is bad press. I think all negative press is good press, because all it means is that their name is getting further and further apart, and it means more people are hearing of this name, and this is a great sign to see. Boohoo have gained a 3.16% this week, but they are not the top riser in the portfolio. In fact, this top riser came in quite suddenly. The top riser in the portfolio gained 7.43% and is Argo Blockchain. Argo Blockchain was one that I've been losing quite heavily on for the last few months. I bought into the markets a little bit too early based on fear of missing out, and so my average share price is certainly much higher than that of the price. I'm down about 20 to 30%. I made the decision that yes, as the shares were going to fall, I averaged down significantly. However, I was very hasteful with that, and that meant I was very hasty, with this maneuver, and it meant that I depleted a majority of my cash, and Argo Blockchain continued to fall. That is no concern to me because I do think they have positive share price drivers over the medium term. So I'm talking 3 to 5 years, such as their Texas facility, which is going to be continued to be built out, although providing that the Boatman Capital research report is incorrect in what he has said, or she, in the way that there could be some underlying issues there that could present some serious governance problems with the business. But then we've also had a bit more of a confirmed statement in an RNS about the listing to the NASDAQ. Now, I don't know if there's any sneaky way that they've done this without actually confirming it, and I don't know if this is actually a confirmation. But from what I've read of this RNS, they're filing to be uplisted onto the NASDAQ, and they did specifically mention NASDAQ, and they also mentioned US listed. So this is a promising sign to see. This is something that is very much out of my depth. Obviously, I bought because I think Argo Blockchain can have a much higher valuation if it was listed in the US, if we look at Marathon Patent Group and Riot Blockchain, for instance. However, I don't know how this process is exactly undertaken. Perhaps that was a foolish step that I should have looked into more before buying the stock. Regardless, as far as I'm aware, this is a good sign. It means things are moving into place, albeit slower than I initially expected, and hopefully this means that Argo Blockchain will go from being a massive loser in my portfolio to actually being quite a large winner. And if you'd like to sign up to my stockbroker Freetrade, you can get a free share worth up to £200, but at least £10 if you sign up by the end of the month using my link in the description down below. The top faller in the portfolio this week was pretty much Join. We had Team 17 declining by 2.04% and Hashtag Group declining by 2%. With regards to Hashtag Group, I've decided that I don't really have any conviction that would be higher than any of the other stocks in my portfolio. This means that if they were to decline, I'm not going to be buying the dip, for instance. And yes, I did say that when I sold the last half of the position about a month or two ago, that I was planning to just let the winners run, and that's what I'm going to continue to do. However, after reading, obviously I keep mentioning this, The Art of Execution by Lee Freeman Short, there is a link in the description down below. This talks about cutting your losses with strategy, or at least buying the dip significantly. Hashtag Group, and I need to create a plan in advance, hence why I'm thinking about it now. Hashtag Group is one that's like, yes, if it drops further, all it's going to do is cut away from my winnings. So I took profits, I've top sliced, admittedly quite a hefty top slice, and now I'm just sitting on the position. I've put a stop loss in place, which isn't something I do often, and this reflects a 20% decline in the shares from their all-time high, which roughly, as of making the stop loss, is around about £45.70. The idea is that if the shares drop below that, my position is sold out, then I have cash in the portfolio. This prevents any further downside risk, and if the shares bump back up afterwards, I'm not really too bothered because I would have at least taken my profits in this investment and then I can deploy the cash elsewhere. Worst comes worst, is just another way of keeping my powder dry for now, and it also stops me from having that urge to spend cash in the portfolio, which is something I certainly struggle with. Patience is something I'm still trying to get to grips with, and when there's cash in the portfolio, I'm like, well, I want to develop my existing position so that I can better benefit my future self. And in fact, that is an interesting point because this week I think I've improved in that. Maybe it's because I've been looking at the markets less, or for instance, you may have noticed I've been quite distant from the channel and I only really bought shares in Boohoo at like Friday afternoon. I'm talking about 3 p.m. So nearly forgot to buy any shares at all. I have been distant and you may have noticed this. Comments, I understand, I read every single one, but I'm about 2 weeks behind in responding to them. I will get back and respond to them as much as possible, though I've been busier than usual through my own fault, really, because I've been going out more, which means I've been spending more money and I can't invest as much in the portfolio. But this is, I guess, one of life's difficulties when you are a 21-year-old guy. I'm headed to a club likely later, and I'm also going to a festival at the end of the month. And then hopefully I can just reset, chill out, go back into monk mode, I like to call it, be more disciplined, save more money, and get my stuff together. Anyway, I thought I'd just quickly make that disclaimer. Whereas with Team 17, shares, yes, have declined by a similar amount, but slightly more. I'm still waiting for this to cool off. I anticipated that they would do this as part of my learnings or lessons in the learning of patience, because I noticed that shares have gone up too fast, too quick. And that was only speculation, don't get me wrong, because some shares can continue to go up. But I felt that the news on it wasn't really justifying the case or changing the story for Team 17 to justify that straight incline. One of the two news items would have. But the acquisition activity in the industry isn't really a reason for valuations to be propped higher, even though, yes, I do think Team 17 is likely to be acquired. I think it's one of those where it's not really going to directly impact the share price. I don't think shares should have got excited over that, especially a month after the last bidding. Regardless, this is from Tencent buying Sumo Group, which is a similar competitor in the UK. I think with Team 17, this is a position I'd like to flesh out where possible. I'd like shares to ideally drop below my average price, and then I'd just like to put small sums of money into this stock, build it out, because then, as I expect, I think in about the next 3 to 5 years, this stock could be the target of a takeover or acquisition by a big US conglomerate company, not necessarily a pure online gaming company such as those with video games, but maybe from a giant company that's looking to really diversify their asset pool. Even the likes, and I'm just completely speculating here, even some other forms of entertainment platforms, maybe ones that provide TV series or the likes, could say, hey, look at our arcade games that we've now bought or could buy from Team 17, and you can play these as well just on your TV, because realistically a lot of the games that Team 17 produce, and I'm thinking of Worms specifically here, are games that you could literally play probably on a TV remote. So I wonder if that would be something that could be integrated somehow in the future. But as I mentioned, this is only speculation. As for Games Workshop, I was tempted to top up this week. I know it's above my trading range, but I figured that this is a stock that it's rarely going to go below my average price. And I figure I should continue to develop the position where possible and continue building my stake, because yes, it is my highest conviction stock. And you may be surprised because, yes, I've got a bigger position in Boohoo, but that's because the valuation in Boohoo has been more attractive. So I've been buying more Boohoo, although I will admit my conviction between the two stocks is actually very similar. Boohoo, the industry, is one that I'm not the biggest of fans of, at least compared to the likes of what Warhammer has got and how strong their moat is. But I still think Boohoo has got a cracking business in an industry of something that I personally use, because I like to buy cheap clothing, cheap, timeless clothing that can last longer. Or worst comes worst, I just wear the same outfit. I'm a very minimalist style. I can just wear the same shirts, buy multiples of them, and then when they get damaged or whatever, I can just get rid of them stress-free, save money, invest the rest, or at least at the moment, spend it probably on alcoholic drinks, because I'm an idiot. That's simply as it gets. And if you're interested in how well my 10 UK stocks that I suggested to buy back at the start of the year for 2021 have done, then click the card at the top right of the video. Thank you for watching. I'm Foreman. Have a fantastic day.